Hello, I'm Ben Jones bringing you the first targets in focus of the week. The UK has an important few days ahead with both CPI data and unemployment rates being released. Joining me on the line to discuss their projections for the sterling is Sasha Nugent from Caxton FX. Now to begin with, Sasha, last week we saw the sterling rocket to a 2-week high against the euro after the ECB announced their decision to cut their interest rates. This decision really shook up the market in the short term, but how do you see things playing out over the 1, 3 and 12-month periods, and what brings you to these conclusions?
The decision to cut rates was actually a surprise, not necessarily because I thought they weren't going to cut rates. It was just the fact of we didn't think that the 1 week in which the inflation numbers have come out was enough time for them to actually come to a decisive conclusion about what they were going to do about monetary policy. So that was kind of the shock factor in that announcement. I actually think the rate did more than just aim to combat inflation. I think it actually solved the issue of a strong euro and what that has to do with the Eurozone recovery. So I think that over at least the next month, the euro will be on the back foot just because in terms of economic figures at the Eurozone as well, they have been better but not great enough to see them pan out better against sterling. I mean, sterling has had figures revised upwards in terms of growth. We've seen that we'll find out this week if the Bank of England will increase their forecast for growth. And on the backdrop of that, it looks like the euro is going to be on the back foot for a while yet against sterling. In terms of the 3-month projections towards the end of the year, I think we'll begin to see a bit more talk about how well the unemployment is in the UK, and then that will give also a clearer outlook on where the Bank of England are moving in terms of forward guidance. In terms of the 12-month projection, I think again, it's pretty much the same thing unfolding. I think the euro, I think investors will begin to understand that the euro needs to remain weak in order to support the recovery. And we've established that this recovery is fragile. As ECB President Draghi said many times, that it's fragile and it's uneven.
Moving on to the pound-Aussie dollar pair, we saw that strong export data coming out of China really rallied the Australian currency against the pound towards the end of the week. Do you think Australia's strong trading links with China will continue to help the currency in the future? And what are your short, mid and long-term predictions for this pair?
Yeah, definitely. I think China's definitely helped Aussie recently. I think in general, we've seen from the Reserve Bank of Australia that the figures out of Australia haven't been bad, but they haven't been strong enough, especially as the mining sector and boom cools. And especially after we had previously had some worries earlier on in the year about China's growth as well. So now that China's starting to pick up, that's definitely helped the Aussie get short term. Yes, the RBA again have continuously said that they need a weaker Aussie in terms of to support growth. So that will definitely have an influence as well. But in terms of my short term views, I think that sterling will remain in control. In the next month, I think we'll still see levels around 170. Even in 3 months' time, I think sterling could push a bit further to 170, 150. But then in terms of 12 months' time, I don't think that sterling will have such a strong hold on the Aussie anymore. I think we'll start to see the lower interest rates filter through to the economy stronger, and we'll see also the effects of the Chinese data and Chinese economy filter through even more, have a greater impact on this pairing, and so I think it will pull back a bit, back to 169.
And finally, if we can take a look at the pound-dollar pair, strong GDP data really helped the greenback soar against both the pound and the euro last week. But how do you see this pair faring in the longer term, and what are your projections?
In the longer term, I definitely think that the dollar's in control of both pairing. We've already spoken about the euro, and at the moment the odds are not in its favour. It's not just inflation or a weak euro. We've also got the ECB doing its assessments on European banks, and that could possibly open a can of worms. So at the moment, I think the dollar's got more of a handle on the euro than sterling has actually. But I do think that the dollar against sterling will remain in control, especially as if the Federal Reserve tapering talk and tapering debate continue to dictate the market's conversation. In terms of its longer-term projections, I think by the time we're this point next year, I'm pretty sure we should see the Federal Reserve begin to taper back. And so that will definitely give dollar a drive, pulling the rate possibly back down to 153, maybe even lower. But I think that sterling actually will put up a fight. I think that sterling has opportunity, actually has some window to limit potential losses depending on how well their employment figures go in and what kind of language the Bank of England will be expressing as 2014 unfolds. So how far down the rate can fall is partly dependent on the progress of the UK, but I think definitely the dollar and what's happening with the Federal Reserve in the US will be a huge influence.
Sasha, thank you for joining me today. That is all for today's Targets in Focus. We will have another edition for you on Wednesday, but for now, goodbye.